Welcome to Mogobe Nuggets of Wisdom podcast. My name is Mompoloki Lerumo Mogobe. Our objective is to enthuse, inspire, energize, and empower entrepreneurs and entrepreneurs of all stripes here in BW and beyond. We do so by inviting these entrepreneurs and entrepreneurs into our makeshift studio. Sometimes we call them to the restaurant, sometimes we go to our studio, and we ask them to share their experiential knowledge, their experiences and their expertise. And we ask them as many questions as we can, aimed at empowering you also as a viewer. Hello dear viewer, dear listener. My name is Mompoloki Lerumo Mogobe. Welcome yet again to another powerful edition of Mogobe Nuggets of Wisdom podcast. It's always a pleasure to bring you life-changing and empowering information each and every time. And this time I have a financier, and you'll get to know why I call him that, Mr. Ndzinge of Kgori Capital, Alphonse Ndzinge. Welcome to the show.
Thank you for having me.
Okay. Yeah. Would you be kind enough to tell the viewer about yourself, your name and your background?
Okay, thank you. My name is Alphonse Ndzinge. I'm currently the managing director and co-founder of Kgori Capital. My background is I studied finance overseas in the US, and then I completed my CFA charter holder. And then about 9 years ago in 2012, myself and two other individuals decided to set up Kgori Capital, which is an investment management firm.
Okay. And in terms of academics, what's your background?
So I studied finance and management information systems in Philadelphia. So I graduated in 2005. And since then I've been working in the financial services sector. And I've also completed a professional qualification, which we call the Chartered Financial Analyst Charter Holder. So I completed that process about 8 years ago.
Exciting. I remember seeing you when you were still a stockbroker in Botswana. Tell us about your stint as a stockbroker.
Yeah, so that was actually my first job on returning back from studying. So I joined stockbrokers as a research analyst and as a trader. It was a phenomenal experience. I got to interact with management teams from all the listed companies, trade shares on the BSE. So it was a great entrant into the market. And from then on, it allowed me to propel myself to work in other bigger firms in other markets. So it was a great introduction to the market.
Yeah. So can we call you a stock trader?
Previously you can. I mean, I think that's what I was. Now I'm an investment manager, which is what I have been for the last 15 years. So really my focus has always been on research. So at the heart of it, even though I'm managing a company today, at the end of the day, my real passion is investment management, finding opportunities for our clients and making the right investment decisions.
Okay. Tell us about your company, Kgori Capital. First of all, why Kgori? Kgori is a bird.
Yes. So Kori is an interesting story. It's the national bird of Botswana. So we are a proudly Botswana business. We're homegrown, 100% citizen owned. We started the business in 2012 as a complete startup. So from humble beginnings, we've been able to actually demonstrate that a local firm can actually compete with the likes of the international firms in this market.
Now, do you actually invest on behalf of individuals and companies? What does Kori do specifically?
Yeah. So Kori is an investment management firm, or also called an asset management firm. So what we do is we invest on behalf of individuals, companies, charities. So what we do is we take their assets and find investment opportunities given whatever objectives they have. So the idea is we want to at least give them the best risk-adjusted returns over the long-term period.
There's a guy who's well known by the name of Ray Dalio. Yes. Are you anything like him?
Hopefully one day. I mean, I'm a big admirer of Bridgewater and his principles. They've guided us throughout a lot of our challenges and our growth throughout the last couple of years.
Are you familiar with his decision-making methodology, which he talks about it a lot?
Yes.
You want to share a little bit of that and perhaps indicate whether some of it is applicable here in Botswana?
I think that in the fundamentals of his principles there are some things where I think there could be some deviations. I think his approach to management is very direct. So I think for us, is we have to apply a little bit more empathy with our team and the way we process and do things in our operation. But there are a lot of good lessons that we can learn on how he's done business. I mean, he has one of the largest asset management companies in the world, and he's been enormously successful. I mean, he's one of the wealthiest men in the world, so definitely he's doing things right.
Because I remember reading that he said he had failed spectacularly somewhere in the 80s, and then he came up with a fail-safe system of decision making, which has algorithms and whatnot. I don't know whether you've delved into that.
Yeah, I think we have. I mean, I think in terms of the experiences, I completely agree. I think you have to fail or experience challenges to grow. I think so. But on a day-to-day basis, in terms of the way he's traded, I think that was more relevant back then. But yeah.
Suppose I have a windfall of 100,000 or maybe 500,000, and I'm torn between taking this money to the bank, you know, in an account to earn interest, number one. Two, real estate. Number three, coming to you. Make a persuasive argument that I should bring that 500,000 to you.
Okay, that's depending on your objectives of what you want to do with that 500,000. I mean, for instance, maybe I should just say that we have multi-specialist capabilities. So if you want to invest in equities, if you want to invest in fixed income, or even multi-asset strategies. So we have investment opportunities for you, not just locally, but even internationally. So there's, depending on your objectives, say this is an emergency fund. If you want to, we have products or solutions like what we call is our enhanced cash money market fund. So it's similar to a bank account, but you're getting a higher yield, and you're getting, instead of one counterparty exposure, like putting your money with one bank, you're getting a diversified mix of different exposures with high quality, simply structured instruments. You're getting a better yield, you're getting the same liquidity profile. But if you have another objective, if you're saving for college tuition or a holiday in a number of years, we have different solutions for that too.
So when a client comes, you spend a bit of time trying to establish what their key objectives are.
Yes.
Okay, and once you have those, you structure the financial plan around those objectives.
Absolutely. So it can be different in terms of if the client comes directly to us, we will do that. Or if they come through a financial advisor, that plan would have already been in place, and they'll just use us as a solution provider.
My question remains though, I mean, why should I prefer you to real estate or to the bank account?
I think in terms of the bank account, as I said, you're getting a better return. I mean, the bank account, you're going to be in a fixed deposit, right? In this case, you're going to have the same features of a fixed deposit, but you're going to have a higher return. And your risk profile is actually going to be lower because you're going to be investing in more than one counterparty. If it's real estate, now you have to check, okay, what are my goals? I mean, real estate, how are you going to get your return? It's going to be either capital appreciation or it's going to be distribution, the yield. So you compare the different strategies and say, given my time horizon, where do I see on a risk-adjusted basis? I mean, you could put your money in you can go gamble the money. I mean, you could probably make more money, but on a risk-adjusted basis, it doesn't make as much sense. So you'd have to just compare it to all your different options, and I think we'll probably give you one of the most compelling solutions.
Yes. Are there minimums in terms of different categories of what people can invest in that you make available? Could you please run us through some of your products?
Yeah, so depending on the strategy. So for the individuals, what we do is we pool assets. So what we have is a collective investment undertaking license from INBFIRA, which allows us to do that. So for those products, we have two products. We have an enhanced cash money market fund, which is one of the highest yielding money market funds in the market. So corporates use it for their surplus cash or their treasury management, and individuals also use it for the same reason. So the minimum investment there is 10,000 pula, or a monthly debit order of 1,000 pula. The other strategy, which is called our global managed fund, this one here, it's compliant with the prudential rules, meaning this can be used for pension funds. So a lot of small pension funds actually invest in this kind of strategy. It's a multi-asset strategy. It's in local assets and international assets. So it's a highly competitive growth strategy. So over the long term, if you're really trying to grow your capital, this is a great strategy for you. The minimum here is an investment of 1,000 pula or a monthly debit order of 200 pula.
I've heard it said that past performance is not an indication of future returns, and this is mentioned time and time again. And okay, if you accept that principle, would you tell us what your past performance has been as Kgori Capital? And can I have confidence that this past performance will maintain or will improve over time?
You know, the thing that I love most about our industry is we're measured every day. So every day I know how I'm performing, whether it's going to be I can measure it over the last 5 years, the last 3 years, or the last 1 day. And I can tell you, since the inception of Kgori Capital, and there are independent surveys done by the asset consultants in the market, and you can compare us to all of our competitors, both local and international. Kgori Capital is consistently in the top tier, either ranked number 1 or number 2 or number 3 over the long term. So
out of how many?
Out of 8.
Wow.
So it's something that we take a lot of pride in. And the thing is, it's not only about investment performance. The thing is also about operational or admin efficiency. The one thing that I can tell you as a proudly Botswana business, we've been in this survey for 6 years now. Every single quarter, consistently, we're ranked number 1. Not one quarter have we ever not. So in terms of delivering, it's something that we take a lot of pride in. And you're completely right in terms of the past not necessarily reflecting the future. But what it does demonstrate is you do have the track record. You have the ability to navigate through the different market cycles, which we are proud to say that we've demonstrated.
Okay. Is there any kind of protection against loss? Is there any insurance component? If, for instance, I'm bringing my entire retirement fund to you, is there any fail-safe methodology that you apply to make sure that I don't lose completely?
Yes, I think at a corporate level, we do have insurance. There's professional indemnity cover, which protects our clients. But as you would say, with most, depending on the different asset class, some assets, there is volatility. So there's no guarantee of returns. I mean, for instance, if you invest in equities, there'll be periods when they're going up and there'll be periods when they're going down. But in terms of the organization and the safety of your assets, there is professional indemnity cover from the insurers that we do subscribe for.
Okay, a lot of our viewers are young entrepreneurs. Some of them are graduates trying to figure out what to do with themselves.
Yeah.
So I wonder whether Kgori Capital assists with any kind of form of training or talent development.
Absolutely. I think some background on our team. We have a team of 10, I believe, highly talented, well-driven Botswana, predominantly women actually, and I think that's part of our approach is about inclusivity. In terms of young graduates, yes, we take on graduates. Given the capacity of the business, we take on 1 or 2 graduates on an annual basis, and where we can, we absorb them into the firm and allow them to grow and learn. But it is definitely a challenge for our industry. I think what you find is our industry is quite large in terms of, particularly on the institutional asset side. There's almost over 150 billion pula in assets. But the size of the industry in terms of employment opportunities is very limited, which is something that we are trying to change in demonstrating that we can build local capacity. So it's something that we're definitely trying to take head on.
Is the industry still dominated by foreigners?
Yes, it is. It continues to be.
And what can be done about that? Can there be an aggressive strategy to change those dynamics or to improve the situation?
I think a lot can be done, and I think it's also in terms of consultation between the regulators and, more importantly, the asset owners. Because in any industry, the owners of the assets or the actual clients at the end of the day are the ones who really have to spearhead and drive the change. I think a lot can be done. There has been progress in terms of citizen development. I mean, some funds have actually spearheaded this with their own citizen economic empowerment policies, but a lot more needs to be done. I mean, not only in terms of the participation of locals on the ground, but even the fact that so many assets are being invested outside the country.
Speaking of assets being invested outside the country, help me understand the dynamic here. There was a time when the government had a 70-30 split local. Yes. And I heard that is being adjusted. Yes. What are your views about that split, that allocation, which I think is it's mandatory, and to what extent does it need to be altered or changed?
Yeah, that's quite a controversial one because there's 2 very polarizing views on that. On the one hand, you have the view that argues and they want to protect this stance that no, there's no assets in Botswana. If we bring those assets back, there'll be a hothouse effect.
What's a hothouse effect?
Hothouse effect is when there's too much cash chasing too few assets. So there's going to be inflation in asset prices. So if millions and millions of pula chasing property and shares on the Botswana Stock Exchange, all the prices are just going to explode. which is not really driven by fundamentals. So that's, and then obviously that means price inflation, and will have other effects on the economy. The other school of thought is where I stand and definitely stand in, is that we have to create the assets. We have to create the opportunities. I mean, we can't really just sit on our hands. There's a lot of opportunities that we could be doing on the infrastructure side, on the agriculture side, even with other institutions like financial services. There's a lot of things that we could be doing where we're not saying reverse it and immediately bring all the billions back. No, I mean, you do it in a systematic way over time, gradually, because most advanced economies, people need to appreciate, are really been driven and supported by institutional savings. If you look at the US, the Eurozone, the UK, over time.
Even in the Far East, right?
Exactly. Institutional savings have really had a big, significant impact on the social development and economic development of those markets. So a lot more could be done here.
I'm with you on this one. And how far, what is the current position? It's still 70-30?
Yes.
And where are you pushing it to? Where would you like to see it?
I think gradually, I think over time is one where it is currently 70-32 to answer your question, but I think if you could move it up, say down to 50-50 over the next 5 years, because as I said, you don't want to automatically change it and be too drastic, because the implications could be quite material and drastic. But I think there has to be a concerted effort to change that.
Does COVID play a role in any of this? I mean, do you think that the COVID situation adds a greater urgency for that to happen?
I think so. I think COVID is, to many people, even to this our industry, is a game changer. I think once the dust settles, things will be quite different, and the way we operate and do things can be quite different. I think, for instance, if you look at the economy, the structure of the economy, we've been an economy that's through our prudent management over the years, our reserves have accumulated quite significantly. And in a short space of time, of less than 2 years, they've dwindled down quite significantly. So even the way we allocate capital and think about our future savings has actually changed. So we really need to go back to the drawing board and say, what is in the best interest of all Botswana?
While still on this subject, how has it directly impacted Kgori Capital, COVID that is?
I mean, fortunately, at least from a health perspective, I mean, the team, we haven't had any significant impact at this stage. But I think the one thing, obviously, with any other business similar to ours is the working from home, looking at more digital solutions for our business and how we can respond in a creative way, in a better way to engage and interact with our clients, our potential new clients and existing clients that we
I've heard people say that COVID has been a positive. I've had people coin the phrase COVID dividend. Did you experience any of that?
I think yes and no. I think there are definitely some positive
Deal with the yes part and then the no part.
No, I think there's obviously the positive aspects in terms of we can realize that we can do things more efficiently and do things different. I mean, there's things around how we engage with our clients, and even the way we, like for instance, we talked about solutions we have for individuals. One thing that we have and we're very proud of is actually the first of its kind in Botswana, where we have like an online portal where clients don't necessarily have to come into the office and ask for requests to whether make withdrawals or contributions. So everything is done online now. So that's a dividend. I think also another dividend has actually been the performance of the markets. The markets have actually been, particularly the advanced markets and equities in particular, they've actually been quite strong. I guess
that's why the richest people have gone 20-30% richer.
Exactly. I mean, we've seen unprecedented fiscal and monetary stimulus, particularly in the US. I mean, it's almost 60 to 70% of their GDP has been put back into the economy to stimulate it. So these things, the long-term ramifications, we're still going to find out what the implications of inflation and et cetera going forward. But I think from our basis and our clients' basis, it's actually had a positive effect for now. The negative is really around the social issues regarding COVID. I mean, people are
loss of life and so on.
Loss of life and loss of jobs, loss of well-being, livelihood, etc. So those implications were part of one community. So even though we can't escape and divorce ourselves from those issues.
All right, the vision that the business was founded on, can you talk a little bit about the vision thing? You mentioned that you started with other partners who are no longer there. But what was the original vision, and to what extent is that coming to fruition?
Okay, maybe let's start a bit of background. So we, as the partners, we had all worked together previously, I mean, for a global investment firm. I was based in Cape Town myself on a big Africa fund. At the time, it was actually the largest Africa fund. It was a time when there was an African Renaissance. This was between 2008 to about 2012. So it was traveling a lot, experiencing the continent, but also looking after Botswana clients. We collectively decided, look, we want to see a change and more impactful solutions for our clients in this market, and we need to demonstrate that Botswana can actually do this, right? So what we did is we at the time we had partnered with another company in South Africa, and we set up a JV, a 50-50 in 2012.
A joint venture for those who don't know.
Yeah, so we set it up as, initially it was a JV. So we came in, there was a lot of apprehension, there was a lot of naysayers saying, what do you guys think you're doing? So I relocated back from Cape Town back here, and then my other two partners at the time, we set up the firm. It was difficult at the early stages. I think it took several months before we landed our first client, and there was a lot of questioning and thinking, was this the right decision? But eventually that client, that trust.
Incidentally, are there barriers of entry? Is there a significant capital outlay?
For asset management, no, but I think there's more now than there used to be, and it's really around compliance. There's a big component of the compliance side, and I think it's
NBFIRA stuff.
NBFIRA stuff, FIA stuff, Financial Intelligence Authority. So there's a lot in that aspect, but also our industry, the degree of operating leverage, our costs are relatively fixed, and our big cost is people. Okay. So and there's a lot of highly qualified and quite, for lack of a better word, expensive teams that you have to put together. And if you don't have the assets or the revenue to support that, that could probably be a barrier to entry. Because one of the big aspects that when clients are selecting you is the quality of your team. So then from then on, what we really wanted to do is just demonstrate that we could actually have an impactful business in this market and making sure we could get clients to their financial destiny.
Talk about that destiny. Do you actually make multimillionaires the way you invest? I mean, I have a whole group of youngsters who are really interested in where the cash is. Can one argue that properly managed, properly applied, you can make a lot of wealth from this? Let's go talk about the mullah now.
Absolutely, over the long term. I think a lot of our clients are retirement funds. So when they entrust us with their money or the hard-earned savings over the long term, our primary goal is to make sure those clients retire in dignity. So when they retire, they should know that my money's actually worked for me for the last 30 years that I've been employed, and they should be able to sleep at night knowing that the people who are managing their money are doing it in their best interest. So absolutely, I think that's what we wake up to do every single morning of the day.
Meaning that you can beat inflation?
Absolutely.
And meaning that a person can rest assured that their money is growing. Is there an average growth rate? Can one expect 12%, 15% per annum?
It depends. I mean, those are absolute returns, and it depends on the cycle. I mean, so now we're in a very low inflation cycle.
I'm talking stretching it over 10 years.
Yeah, I think what we like to think of it is, as you said, you have to be in inflation. We're looking in terms of real returns. So if it's a balanced strategy, we're looking at least real returns of plus 3%, 3 to 5%, CPI plus 5. Because as you recall, those several years ago when you met me at Stockbrokers, our inflation was close to 20. It was 15%. Remember? So now we have inflation which is low single digits. So in those periods, we'd be happy to be getting 18% or 20% annualized. But
that's
now,
also the period when we had BOPC's, Bank of Botswana certificates, and that was a golden time for us.
And when the local market was returning 70%.
But for the benefit of the viewers, can you explain why we had BOPC's then and why they are no longer there? Are you able to say?
Yeah, if I recall, I mean, what really was the BOPC's one instrument to mop up excess liquidity in the market. So it was really a tool by the central bank at the time. I think they didn't see, so at the time, what used to happen is there were also dealers being like the stockbrokers. So individuals could go and buy BOPC's, and the rates were they were quite exorbitant, they were quite high. So it was more, and it was now challenging.
I think we could get 12% return those days.
You could. And now they were challenging like deposits from the commercial banks, etc. So the purpose of the instrument was not really being utilized. So what they decided to do was they now limited BOBCs to only being to the banks, only the commercial banks.
They shifted it to the banks and then it disappeared.
Yes, and then it
but
disappeared.
I loved the instrument.
No, they were perfect. And then now they've changed them into treasuries, treasury bills.
But the returns are not the same.
Well, they're not. But as we said, the cycle is very different. Then inflation was and it was a very, very different market.
It was a marvelous period.
Yeah.
Kgori Capital is a signatory to the United Nations supported principles of responsible investing, UNPRI. I need to read this to get it right. What is the principles of responsible investment?
Yeah. So what it is basically it's an initiative that was initially, now it's supported by, but it was part funded by the United Nations. So what it is just an initiative to ensure that capital focuses and considers environmental issues, social issues, and governance issues. So we as Kgori Capital, we've been signatories to the PRI since 2012, the inception of the business. So what
is it a requirement for every investment fund?
No, it's not. I think it's become a lot more mainstream in the last 2 or 3 years, but I think it's one of those where there's a lot of, it's getting a lot of focus, particularly in the larger markets. But it's something that guides us in the way we allocate our capital for our clients. And if I can give you an example, I remember when I was in school, when we thought of investing, it was two-dimensional. It was risk versus return, right? So now we're looking at things like risk versus return versus impact. How we engage with management, what are they doing on the governance side? What are they doing on the social issues? What are they doing on the environmental issues? So this framework guides us.
So it's not an NBFIRA requirement, it's just something that you voluntarily acceded to.
Yes, but I think it's quite important. I think what we're talking about is long-term sustainable returns.
In other words, not all the 8 fund managers have signed to. I'll call you fund managers because you've managed funds.
No, it's another way of
So not all of them are signatories.
I can only speak to the local signatories. The local signatories, there's 3. I mean, you don't have to be, not just the fund managers, but asset owners are signatories. So the actual pension funds are signatories, and then they'll dictate and ensure that their fund managers are signatories. But it's not the only one that you can sign up for. It's probably one of the most well-known. Another one that were signed up is the Financial Task Force on climate-related disclosures. So those kind of things, it's one of those things that it's quite imperative, but I think with time, you probably find it will become a requirement, not necessarily to be a signatory, but every manager will have to have some policy regarding how their investment stewardship and ESG.
Now, there's this phenomenon of cryptocurrency and Bitcoin.
Yeah.
Are we getting to a stage where fund managers have to become involved? And what are your views on crypto?
That's an interesting one. I mean, for us, we've never in the past invested in crypto. We've normally invested in, long-only managers, and we invest in traditional asset classes. I think for us, until we know enough about it, we will probably steer away. But it's something that will continually educate.
It's mysterious for you too.
It is, but I think it's one of those, and we get a lot of questions from clients, particularly when they're rallying and doing extremely well. I mean, when you go and report and back and engage clients, they're like, okay, but why didn't you guys buy Bitcoin? It's up X%. So it's one of those where.
And how do you respond?
No, it's one of those where we invest in what we understand and what we know. So for instance,
sounds like something Warren Buffett would say.
Yeah, absolutely. so for us, like now it's down. It's been crashing most recently. There's a lot of volatility in this because we don't only we're not only chasing returns, we also have to manage risk. So managing risk is almost as important as the return. So volatility for us is what is our principal measure of risk. We have to manage and stabilize it.
What I don't understand is why a tweet from Elon Musk can affect the entire market.
Yeah, I think markets are driven a lot by sentiment. So some of the fundamental things that we learned and it's sometimes we cannot explain or how the behavior of the market.
I think inevitably you fund managers should really guide the public because I for instance in my LinkedIn, it's like every 10th person there wants me to get into crypto and says they can invest for me. I mean, the pressure is so much, and we have people even in banks telling us that get into crypto. So don't you think it's time that fund managers take the time to really master this so that they can guide the public?
I believe so. I agree. I think it's one of those that not only the fund managers, but I think all the stakeholders. I think currently it's unregulated. So I think you need to also be protecting the underlying investor. So we can, but not everybody has going to be, we're not authority on information. I mean, we can get it wrong. But I think there's a lot more education that we need to do and also extend that to the potential investors.
Has it come to a point where actually it can be accepted as a medium of exchange in Botswana?
I wouldn't know.
Because I think in South Africa it is.
I'm sure. I know in other markets it is, but I haven't heard of a merchant here that it's accepting it as a medium of exchange. But that's definitely coming. I think crypto is becoming so mainstream that it's either eventually you're going to have to be participating in it somehow.
What fascinates me the most about crypto is that the people who are participating don't fully understand it. Number one. Number two, the people who are being invited to get in are being told that there's no need to fully understand it as long as you get results. That's the biggest challenge for me, trying to wrap my head around it.
Yeah, I think that's one of the challenges. I think once it reaches that point where it's so accepted by society, I think that's when, because a lot of instruments, people don't actually really understand what are the fundamentals driving this price, etc. But I think that for us, it's still a bit on the riskier side. Until we can really appreciate the underlying fundamentals, we'll steer away from it.
Let's talk about what you do. I mean, somebody wants to come to your firm, Kgori Capital, to invest. What would you say is a reasonable investment horizon in terms of time frame for you to expect reasonable returns? Because I've heard a lot being said that one should be long-term oriented, and then I've read even Warren Buffett saying that his average investment period is forever. What is your take on that?
Yeah, it's really driven by the objectives of the client. Given your horizon, I mean, for instance, if you're a client and you're saving for, usually there's a purpose why you're saving. It can be, I want to save for my children's education. That'll be very long term, depending on the ages of your kids. And then you have emergency funds. This is more liquid in nature. But for our for a shorter term fund, I'd probably say at least a year. But for the longer term, a growth fund, I'd say a minimum of 5 years. A minimum of 5 years, and the longer the better.
Okay. I'd be remiss if I don't ask you about the recent challenge you've had in terms of a court case, which I believe went as far as the Court of Appeal. Without really getting into too much detail, how challenging was that for Kgori Capital? And what is the status? How did you maneuver through that period?
Yeah, I think it was, to be frank, it was an enormously challenging period. But I'm happy to say we're through it. The company has been cleared. There was really no merits to what we went through. And that was demonstrated by the judgment we received from the Court of Appeal, specifically stating that the client actually benefited. It was just a contractual issue that shouldn't have really been escalated to what it became. But the important thing is we got through it. I think any company, any entrepreneurial journey or company's journey, you have to go through ups and downs. The important thing is we're resilient, we persevered as a team, we did a lot of things that buttressed or strengthened the business. But I think that we already had those good ethics and governance were cornerstones of the business. They allowed us to survive the storm. We reconstituted our board, we got I've got a new independent in. We went through some rigorous reviews with Nbifura, the regulator, and we also did a number of independent audits with some of the top 4 audit firms. So we checked everything. Where there were places where recommendations where we could strengthen, we did. So it was an experience, but I'll tell you one thing: we're definitely stronger for it. 100%.
But looking back, are you able to say there's a little bit where you may have erred a little bit in terms of how you handle things, or you're totally blameless in the way you handle the situation?
I don't think any firm is perfect. There are probably things that we could have done better. But in terms of the allegations, absolutely, there was no real merit or substance to that.
Because there's no issue of fraud, wasn't there? Because the underlying allegation was fraud, but there wasn't any fraud according to the Court of Appeal judgment.
Yeah, I think, and I don't, not to delve too much into the judgment, but I think, the issue was that it was regarding the contract that we had with this particular client and how it was obtained and whether we benefited for the client and whether, there was anything untoward that was done. The point was, it came out that the contract was legal. The client actually benefited. The fees that we charged the client were actually below market. So that's really what the gist was. I think there are individual components of that that are probably still under investigation, but in terms of the company and its current directors, it's been cleared, which is exactly what I can speak to now.
Was there any reputational damage, and how did you handle it?
Absolutely. I think for our industry, it's all about trust and confidence. As we said earlier, your client or your investor wants to sleep at night. So there was a lot of work that had to be done around that, and there's a lot of work that will have to continue to be done about that. But the important thing is, I think when you go through these experiences and you come out of it, I mean, it should just be a demonstration that, look, they had to go through it, but now they've learned and they're going to grow and develop into even a stronger firm. We still have the same vision and the same commitments that we had before. We have all the faith and trust in the justice system in the country. So we said this is a process that we have to comply with, which is exactly what we did. And then now that once you've complied with that, I think now we can focus on our future.
I noticed you have an image and media consultant. Did that come from that experience? I met your consultant earlier.
Yeah, so what happened was, it did in a way. I think it was more the guidance on press and how we deal engaging with stakeholders, because there was a time when this issue that you're bringing up, it was a major story. So there was a narrative that was pushing it and was not usually driven by the facts. So there was a lot of mistruths, etc. So we needed to just make sure that the correct story was going out, or the real story, the facts were going out to our stakeholders.
And is that something you advise for firms who run into media turbulence from time to time?
No, I would. I mean, sometimes you can do it internally, but I think you have to at least. But the important thing is, the first thing you have to be is transparent. Stick to the facts. And then how you engage and how you try and express that message is really up to the firm.
Yeah. Okay. Let's talk about what advice would you give to a young startups? There might be somebody there who says, I've got to start my own. Yeah. What advice should you give to a youngster there, or an aspiring entrepreneur who wants to open their own investment firm?
I'd say go for it. It's definitely not, I mean, if you understand really what your purpose for setting up that firm is, it's a highly competitive industry. There's a lot of new competition. And then there's also a lot of things that I mentioned around compliance and governance. Focus a lot on that area. And then it's a patient, long-term journey. I mean, it's not overnight success. So there will be ups and downs. So just make sure you stay committed. You build a strong team, and you just continue and just go for it.
Okay. Can it really be? Let's talk about wealth creation. Yeah. I mean, I mentioned this earlier. I mean, people are looking out there and saying, "Can I really make money out of this? Can I be super successful? Can I be considered a mogul? Can we have the Ray Dalios of this world coming out of Botswana from this?
From this, our industry?
Yes.
Absolutely.
Why do you say that?
I'll give you an example. The South African asset management industry today, our neighbor, they have built global firms now, right? If I can ask
the likes of Investec,
for instance.
Yeah.
If I had to ask the question to you the other way around, what is the difference between them and us?
Nothing.
Nothing. The only difference that I can see is there was the institutional support for their business, right? That's the only difference. If we could actually have support.
You basically mean there was an enabling environment?
Absolutely.
It's not as if the government invested in them, but they enabled them to thrive.
Exactly. So then even the asset management firms in Botswana, there's no reason why we cannot be going into regional markets, why we cannot be going to South Africa, why we cannot be going overseas. Ultimately, it can. I think the primary
Has it not started to happen?
No, it hasn't.
Why?
it's capacity building. It's support. So that even
Is legislation preventing it?
it's not legislation. It's a mindset, and we have to think about there's a lot of challenges that our country faces. One of them is employment, right? One of them is and the financial services sector. And I'm not speaking only of asset management. I'm speaking of banking, etc. You really have to have a captive and involved indigenous market. You have to. I'm not saying it should be all indigenous, but there has to be some high degree of participation, right? There is no reason. I mean, for us, the only differential is if you said, no, Botswana are not capable, they don't have the intellect. That's a different argument, and say, no, those guys are just better than us. We can't do it as well.
That would be a racist argument,
no, but I'm just saying, had you said it, and because then maybe, no, but it's not about them being a certain color or race or whatever, but I'm just saying, if somebody cannot, they say, no, they're just better at you. That's why they were able to do that. But in terms of the level of talent and skill we have in the financial service in this country, I challenge any other regional country in this market. There's no reason why we cannot have a big, booming financial services sector, particularly asset management.
Do you remember the time when there was an IFC thing in Fairground?
Yeah.
There was an area devoted for. What happened to that whole effort?
I am not sure. I'm not sure. I know.
I remember there was a time Mr. Boswang was running something.
I remember. I know it ultimately
International
became
Finances Services Center.
Yeah, I know it eventually became BITC with the amalgamation with BDIA.
Yes.
But in terms of the IFC, I think the structure and opportunity is still available because I think some companies can still register under that umbrella. But yeah, it's really up to us.
It seems to me you're saying that there's a mindset issue in terms of the need for a paradigm shift. What is causing this mindset and how do we get out of it?
I don't know. I mean, it's something that I struggle with quite a lot, and I engage a lot with different parties. I think we need to really understand, because everybody knows what the issues are, what the problems are. But when we're making our day-to-day decisions, allocating, appointing people, we need to understand is what is the ultimate objective of what we're trying to achieve, all right? So for instance, if you say, look, I want to build local capacity in financial services. When you're making your decisions, you need to think that through. And when I'm making this decision, it might be a small decision, but is that aligned to my long-term ultimate goal of what I want to create?
Yeah.
Because what's going to happen is, and the thing is, it's usually people think that, no, it doesn't affect me personally, but it ultimately, it will, and it does, because most of the people who are making decisions, or the individuals, the institutions, they have children, they have relatives, they have people.
You're talking about even those who allocate these funds.
Yes, but ultimately,
and decide which firms can invest and so on.
Yes, and what kind of, not even which firms can invest, but the kind of investments they should be making. I mean, for us is, at the end of the day, what we are is, as asset managers, is we are stewards of capital. So we are the ones who are at the driving seat of taking capital to the right place. That's what our clients are paying us for. So returns, but we're also critical in the financial ecosystem as we're stewards of capital. There's a lot of gaps in this market. One of them is SME funding, right? The way our market dynamics are quite different from other markets, even the regional markets. So the way we allocate and do things has to be different and for the benefit of Botswana. So that's something that I think that
I think people who are making these decisions at the top don't consider their children, don't consider the trickle-down effect.
Or the community.
They just say, no, we're not giving to this guy, finish.
No,
or we're taking this direction, finish.
Yeah, so it's not even, so what I was saying, it's not even about giving to me versus the next guy or whatever, but it's even how we allocate capital and where we're allocating this capital, we're steering it towards. I mean, for instance, I'll give you a perfect example is, I'll go back to SME funding. There's a huge gap there. I know there's some new players in the market coming with but their biggest constraint is funding.
Let's go on the positive side. If it were up to you, how should it be allocated? What should be happening?
No, we need to identify where are the bottlenecks in our economy, in our market, and identify if we have suitably qualified local institutions that can be participants in that. I'm not saying we should crowd out international firms, no. But we need to identify how are we building long-term solutions for our country. That's what I would do.
Yeah. So those are the significant challenges you see in the industry.
Yeah, but one other was obviously digitization, which is not a challenge; it's an opportunity, which I mentioned earlier.
Yeah, but it's something that is anything been done on that?
No, I think there is. I think you'll see that there's going to be a rapid evolution or improvement in technology being used by service providers.
Yes, partly because of COVID.
Partly because of COVID.
Yeah. Look, I want you to teach us a little bit. There are people who sometimes are thinking in terms of investing in unit trusts, which I think in other jurisdictions they are called mutual funds. Mutual funds. Could you teach us a little bit what those animals are, what those instruments are, and how ideal it would be to get to invest in them?
Yeah. Okay. No, mutual funds or unit trusts, they're basically pooled investment vehicles. So you come in and you invest depending on the different solution or different product. So a lot of the different asset managers in the market offer those solutions. I mean, at the one end of the spectrum, it can be a cash fund, which is a money market fund. And at the other end of the risk spectrum, it can be an equity fund where you're investing in global equities and you're getting an opportunity to have access to these different investment opportunities. So they're regulated by NBFIRA, so everybody will have a collective investment undertaking license. There's certain minimums to invest, but you'll be receiving reports. Normally they're tradable. So if you want to liquidate or add more money, you can usually do that quite
And what unit trusts exist in Botswana?
For now, it's mostly that the pool of products that we have it's around the money market. Then we have balanced funds, which is a mix of the different asset classes.
Do they have names or just?
No, if every asset manager will have, like we have the Kgori Capital Enhanced Cash Fund and we have the Kori Balanced Fund. So another player in the market will have their fund, the name of their entity and their fund name. So
what's the biggest advantage of unit trusts?
I think for a client, it gives them access to a diversified pool of assets. So instead of, there's a difference between, saying single stock. If you wanted to buy one share in one company, there's obviously risk exposed to that. But a unit trust is usually a pool of different assets, and it just diversifies the risk of the client. And it's transparent, which is another good thing, because you'll find a lot of other products in the market in terms of fees and transparency. It's a critical issue. So investors should be quite aware of what they're actually being charged, because a lot of your returns can actually be actually wiped out by the fees. Especially if there's a lot of activity, right? Yeah.
If you keep jumping from one to the other.
Yes. So you'll usually have a fact sheet. It'll give you information of some of the underlying holdings.
Is the fees normally a percentage?
It is. So there'll be a management fee. So depending on
roughly how much?
Depending on the strategy. So usually for a money market fund, it's usually about 100 basis points or 1%. For a balanced fund, it's usually between 150 to 200 basis points.
Okay. All right. So how do you make sure you make money through a unit trust? How would you advise a client who says, look, I've had a liquidity event. Where can I put it? Let's consider unit trusts. What advice would you make sure to avoid losing money through?
I think what the client, you'll obviously have to go and make an assessment of which fund manager they'd want to. They can do a little bit of research. All of our fact sheets will be available.
No, we assume we're coming to Kori.
If they're coming to Kori, then it's quite simple. You just look at the history of the fund and the kind of returns it's delivered, the profile in terms of liquidity. What's the liquidity horizon? If I need my money, what period? So our liquidity window is 48 hours. So if you come in and say, I want my money now, it's not like we were going to say wait for 30 days. And then you can even interrogate what are the underlying instruments, because I'm giving you my fund, but where are you putting my money? And then we can actually blow up the portfolio.
Is there one that you feel particularly bullish about?
In terms of
unit trust?
I'm very bullish about our balance strategy. So it's one that's done very well. It has a good track record, a very good investment team that's managing it. So I'm quite happy with that.
Okay. Let's talk about the future plans for Kgori Capital. If you had to grab that crystal ball, 5, 10, 15 years, what do you see?
I think for us, we're very excited about the future to start off with. I mean, the plan is really to grow our clients, assets under management, new products, distribution channels. So there's a number of things that we're very excited about. The good thing is our team we've been around, this is about to start our 10th year in September. But
congratulations.
Thank you very much, thank you. The team has been together throughout even the challenges and the hurdles. The average tenure of a team member at Kori is 7 years now.
Wow.
So I think we have a very stable team where we're excited about bringing in new energy and new people. So the future does look bright. I mean, we're still committed to our same purpose. I mean, I don't know if what we always talk about is invest with pride. So pride for us is more than the word.
Wow.
So it's a realization of our values. So it's passion, reliability, integrity, dynamism, and excellence.
Wow.
So we're going to continue to live by those values and continue to grow and to greater heights.
Do you have targets? I mean, are you not going to tell us what? Are we going to have multiple branches? Are you going to have an office in New York or London or?
I mean, ultimately, we would want to go to looking at regional opportunities. We do have a number of strategic partnerships. We're partnered with, or we work a lot with one global investment manager. We've had a relationship with them for about 7 years.
How does it work, that relationship?
It's so for some of our investments or our mandates, they're global multi-asset. So they assist us with our asset allocation. There's a lot of insights that they provide. We sit on the same meetings. So it's a very cohesive relationship. So it's something that's at least is upskilling for our team here. So there's a lot of benefits that we accrue from that relationship.
So in other words, if for instance, you want to invest overseas, they would do the initial research, and you just piggyback on their research and send the client's money there. Is that how it works?
It does, but it's more integrated. So we would sit, have a meeting. We have regular meetings where we're looking at the critical thing for us when we're starting off with international and local is asset allocation, because we're really driven by our return expectations. So we take in their insights and their views, and then we incorporate that into what we think. But ultimately, the decision rests with us, because we are accountable to the clients.
Yes.
So we do use some of their research, but even some of their insights, and even the way we challenge some of their thinking to make the best and informed decision for our client.
Okay. There's an agreement called the Africa Continental Free Trade Agreement, or area, that came into effect on the 1st of January this year. Services, financial services side. What are your thoughts on it, and how is Kori going to take advantage of that agreement?
I think for us, we still need to explore the complete opportunity, but it's definitely a breakthrough. I think regional integration is a plus, absolutely. There's definitely a lot of excitement happening in different markets. I mean, one that speaks out is Rwanda and what they're doing with the Rwanda Financial Services Center. So I think there's a lot of things that we can do, and we'll definitely look for that as an opportunity for us to grow.
I'm looking at the powerhouses, Johannesburg, Nairobi, and Lagos, or those three areas. How are you positioning yourself in the context of AfTA?
I think for us, yes, in terms of hubs, yes, there are significant hubs, but I think for us, it's less focused on the location. Because for instance, we believe we can service and provide for our clients in Gaborone. But the important thing is the relationship that we have with our potential partners. We have had some involvement and experience with other players in the regional markets, both Nigeria, South Africa, and even Kenya. But for us, we really want to grow out of Gaborone, I think, and Botswana. I think for now, the short term.
Because this is the headquarters, as it were.
And I think there's a lot of opportunity here. I mean, before we even look regionally, we're always definitely keeping our eyes open. But I think the scope for opportunity and impact we can have in Botswana, it's quite significant.
Okay. This is the part of the show where you get to ask me a question, sir. Any question, within bounds, of course.
Okay. No, I just want to from afar, I've known you for many years. I just want to get an appreciation of where you think we are today. I mean, you've been an entrepreneur and a very successful lawyer for a very long time. But how do you see us coming out of this COVID experience? And what do you see as the short-term future for Botswana?
Well, we touched on it a little bit when we talked about some of the the dividend. And you know, I think things have stabilized somewhat. I don't know whether that has to do with the vaccines becoming available, but I'm not getting calls like every week that you've lost so and so.
Yeah.
So I'm thinking that we turned the corner on the COVID side. But I'm an optimist. I mean, I keep telling people I'm an eternal optimist. I mean, what you said about the brain power and the youth of Botswana, I subscribe to fully.
Yeah.
And I do believe that we are on an upward swing in terms of coming out of this.
Yeah.
And you know, I see youngsters now, partly because of COVID, wanting to open their businesses. If you notice, I was asking a lot of questions as to the barriers of entry and what people can do to get involved. So I'm very, very gung-ho that even the economy is in the right hands and the right things are happening. Of course, there's always room for improvement, and I don't want the powers that be, you know, getting their heads too big at this point. But I'm very positive. I think something tells me that 2021, come the end of it, come the beginning of 2022, it will be a totally different picture. That's what I'd like to believe, that things are on an upswing. We're certainly hiring at Mogobe Inc. We're hiring people, and we were contemplating retrenching people 6-7 months ago. That's a big change. But there's a big change. We're keeping our people, and we're no longer going that direction. So that's my outlook. Very positive.
That's very good.
What is yours?
It's very similar to yours. I think it's one of those. It will obviously be challenged. I think there's a new environment that I think we'll just have to navigate. I think things will not be the same. So there's certain aspects that we have to focus on and changing our mindset. But I 100% agree with you. I'm more in the positive camp.
Is there any concluding thoughts that you want to share about Kgori Capital?
No, just on behalf of Kgori Capital, I just like to thank you for this opportunity. It's great to tell your side of the story and give a bit of background on who we are and what we're trying to accomplish. I just hope, maybe one day soon I'll meet some of your viewers and we can potentially do some business with them. Okay, speaking of viewers, you have to look at that camera. There might be one or two who need a word of inspiration on the financial services sector and what you're about. Just say something inspirational by way of concluding remarks. Okay. No, thank you very much for hosting. As I said, my name is Alphonse Ndzinge. I'm co-founder and managing director of Kgori Capital. Things are challenging, but there's definitely a much more optimistic future. Thank you. How do they get in touch with you? Give them the contact details. Okay, so Kgori Capital, the website is www.kgoricapital.com. You can reach us on 399-2400. All right. Anything on social media? We're on LinkedIn, so feel free to follow our LinkedIn page. We actually publish a lot of insights on the market and views, which you might find quite beneficial. And if you want to email us, it's info@kgoricapital.com. Wonderful. It remains for me to thank you. We've known each other for a couple of decades now, and it's been a good relationship. I used to see you a lot at Nona's. I don't see you as much anymore. I hope it's not because of something we did, but hopefully we'll be seeing each other more often. Thank you so much for honoring our invitation. Thank you so much. Okay, cheers. Cheers.